Bitcoin has been dominant. It was dominant all up until this point in the prior cycles in 2017 and also in 21. It stays dominant much longer than everybody expects, and then it tops. And this is the monthly DMARC, and we put in a 13 top. And if I switch that to the daily now, we are getting very close to having a 9.13.9 top. That'll be 2 days away.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul Pal dives into Trump's bold tariff moves and how they could secretly push Bitcoin adoption. Big money, big strategy, and bigger opportunities. Let's hear what they reveal.
And it won't surprise everyone to know that the market cap index has been outperforming the equal cap weighted index. Why is that? Because Bitcoin is about 60 to 70% of the total of the top 200 itself. And there's been some other large caps that have actually done fairly well, like the Dino coins and even Binance or Binance Smart Chain. The point being is that it has not paid to be out the risk curve in crypto, really, for all of this cyclical bull market.
Yeah, as you said, there's been some outperformers, but the market itself has not outperformed.
It's been really tough. It's been really tough. And that ratio chart that I was showing is market cap divided by equal weight indices. And so we have.
Does that go back to 2017, Jamie? Or was it only start at 18?
It starts in 18. Oh no.
Oh no. So you see, if I think about the crypto years, year 4 of the cycle being this year, year 4 of the cycle was 2017. Look what happened. Year 4 of the cycle was 2021. Look what happened. Year 4 of the cycle, we're coming in at the low, exactly as we did every time. It's interesting.
Yeah. The data is a bit patchy in that sort of 2 cycles prior.
Yeah.
But you can see here that there was a huge uptick in the sort of Q4 period as we went into ICO season and all the mania that happened right at the end of that bull market. And then the big move in the 2020, 2021 market started at the
Does it go back earlier in 2017?
No, it starts sort of at...
Okay, because it actually did come from much lower low. So we had 2 legs to the alts run.
That's right. Yeah, absolutely. I don't even think that the index was capturing the top 200 back then. So it's sort of evolved over time.
Yeah.
But I guess the most direct corollary is the 2020, 2021 market, because the data is just a little bit better. And it was at the end of sort of 2020 that actually we saw that altcoin rally and outperformance. Now, in the last couple of years, in this cyclical bull market, we've seen 2 periods where altcoins have outperformed. It was the end of 2023, and that lasted for 6 months into Q1 of 2024. Then it rolled over again, and we saw into Q4 of last year a big move up. And I was talking about this actually at that point. I was writing research around sort of the breadth being extreme at this point. And we did get that rally, but obviously since then it's rolled back over. I think we're at another extreme right now in terms of sentiment.
Bitcoin is back in the spotlight as BlackRock, the world's biggest asset manager, keeps buying the dip. Despite rocky market conditions, BlackRock's spot ETF, IBIT, just added another $25 million worth of Bitcoin to its holdings. Bitcoin is currently trading around $83,300, showing slight gains even as the Nasdaq 100 faces heavy losses from new trade tariffs. While both Bitcoin and stocks are down for the year, Bitcoin has still outperformed the tech-heavy Nasdaq by a wide margin. BlackRock's aggressive accumulation shows strong belief in Bitcoin's long-term value, something CEO Larry Fink hinted at earlier this year. He warned that rising U.S. debt and global instability could make Bitcoin a better store of value than the dollar. Still, Bitcoin's role as a safe asset is up for debate. Experts like Bloomberg's Eric Balchunas remind investors that Bitcoin is more like hot sauce, powerful but not exactly a safe haven. Even so, BlackRock's growing interest is impossible to ignore.
Which would match to me with the 13.9 on Solana as a bottom. There's a lot of things that are getting close to saying the liquidity cowbell is coming and the structure of the market may well change with it and ushering in the next phase. What I talk about, the second phase of the banana zone, which is really often alt season starts at this point. How are you thinking about the evolution of the market going forwards from here?
Yeah, I love when you bring up DeMark because it's a tool that I don't get access to. But it's also there's a lot of learning behind it too. You can't just pick up DeMark and just sort of run with it. There's real rigor in how to implement it too. But it's interesting because it's the mirror image of what I'm looking at with my breadth indicators. So I don't know if we can bring up this chart here, but as you know, for our Real Vision subscribers, I partnered with an index provider called Bitformance to provide crypto indices and sector data to all of the RV subscribers. In fact, we've now delivered the first dashboard inside the Real Vision platform.
That's on on Real Vision Plus, right?
I believe
on the data center, correct? Yeah.
Data center. If you navigate to data center, there is now a new tab called Crypto Dashboard. In fact, we could show this actually.
Yeah, show that.
Bring it up.
There's a lot of work gone into this, and it's really cool.
Yeah, so it actually has been. We've launched it, but there hasn't been much fanfare. We have not actually gone out and done a proper marketing video around it. But look, let's just show everyone today what it looks like. So the left-hand toolbar, you can see under the data center section that there is now a new tab called Crypto Dashboard. And so if you click in here, what it will provide is now sector level information. I think this is absolutely critical. I come from traditional markets, equities. You have a Bloomberg. Everyone in the space breaks down or has market composition frameworks for looking at things, whether it's through the sectors and subsectors. Crypto has been lacking that for the longest time. Now, I helped develop the Bloomberg version of this, but Bloomberg, in their wisdom, really haven't followed through. And in the meantime, S&P and various other index providers are stepping into the space. That's all well and good because that just means ETF providers can create products around this, and that's great for everyone. What retail needs is an equivalent. So this is effectively what that is. And you can see the performance across all the different sectors here. And if you break down the sectors into subsectors, you can really drill in under the hood and see which subsectors are taking the biggest hit, as it turns out right now, because the market's off. But we've also got a top 200 market cap index and a top 200 equal weight index. And that was the chart that I was going to show you, because when you compare these two different indices and their weighting regimes, you get a pretty good indication of breadth.
Bitcoin and altcoins could be heading into a storm after a sharp warning from the Federal Reserve shook the markets. Following Donald Trump's Liberation Day tariffs, Bitcoin managed to hold steady between $80,000 and $90,000, slightly outperforming stocks, while Ethereum struggled to stay just below $2,000. Meanwhile, the stock market had its worst week since 2020, with major indexes like the Nasdaq 100, S&P 500, and Dow Jones slipping deep into correction territory. The real shock came when Fed Chairman Jerome Powell warned that Trump's tariffs could cause stagflation, where high inflation and sluggish growth collide. Powell stressed the Fed's duty to keep inflation expectations anchored and made it clear he's in no rush to cut interest rates. This stance was echoed by other Fed officials, adding to fears that borrowing costs could stay high for longer, which historically hurts Bitcoin, altcoins, and stocks. Trump, on the other hand, fired back, calling on Powell to slash rates immediately, accusing him of playing politics. Despite Trump's pressure, the Fed remains independent, and analysts warn a stubbornly hawkish Fed could put more pressure on crypto prices. Still, not all hope is lost. Crashing crude oil and copper prices, along with plunging bond yields, are strong signs that the economy might be slipping into a recession. That could force the Fed to reverse course and start cutting rates sooner than expected. Goldman Sachs even raised its recession odds this week and predicted at least 3 rate cuts later this year. History shows Bitcoin and altcoins tend to rally when the Fed eases policy, offering a glimmer of hope in an otherwise tense market. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.